I'm sure just about like everybody else, I've been seeing this whole big thing about the White House, floating this whole 50-year mortgage thing.
Is that really a good idea?
It's not even a big deal. I mean, you go from 40 to 50 years, and what it means is you pay something less from 30. That some people had a 40, and then now they have a 50. All it means is you pay less per month. You pay it over a longer period of time. It's not like a big factor.
And everybody's been talking about it. So I've been thinking about it a little bit, looking over some numbers. And, for this week's Carpool Confessions, I want to, hustle and flow a little bit. And while I'm doing my little Saturday chore on the most dreary day I've seen in a hot minute, let's take a little time and go over it and see if it's even worthwhile or if it's a big, as they used to say in politics, especially when it's somebody else's stuff, a big nothing burger or something. So what's this all about? As you know, interest rates went up a couple of 3 years ago or so, and housing became pretty daggone unaffordable. During COVID, interest rates got down well under 3%. Everybody could buy a house. Housing shot up. Even with these interest rates, it didn't go back down as far as the prices. The payments didn't go down. Interest rates went up like crazy because of everything that's going on in the world, the inflation and all that stuff. And, a lot of folks just can't afford houses anymore. And it's gotten just difficult. And now, you know how it is. The houses are sitting on the market. Sellers have just lost it. And, I saw this one the other day where sellers, even though we're entering a buyer's market, they don't believe it's a buyer's market. They believe they still have the upper hand when a lot of them don't. Throughout most of the country, 1 million people have now entered a negative equity position. In other words, a good chance that their houses are now underwater. Well, that's what negative equity means. Their houses have suddenly become underwater. So, they're looking for ways to kind of save this housing market because housing is one of the biggest economic drivers we have. So the White House is floating this whole 50-year mortgage, hoping that it helps out some way. So let's start looking at some, real numbers and seeing how it'll affect, the average person out there, not the millionaires, not the billionaires, just folks like you and me. First of all, start looking at some, kind of real numbers. No, not really real, but, nationwide, not Vegas real right now. So I'm just going to look at a $400,000 house, and I'm going to kind of use some round numbers. I'm only going to be looking at the payment. I'm not going to be looking at all the other stuff and what the interest rates are roughly today. So roughly today, it's going to depend on, where you're at, what lender you use. These are different discussions, your credit score, all this stuff. I'm going to be using about 6.25% on a $400,000 house. Now, most people who are actually buying a house are going to be using a conventional loan. So I'm going to start off there. I'm not going to do VA just yet. May not do it today. And the next one is I'm probably going to use FHA cash. Y'all ain't got to worry about it. The average person doing a conventional loan actually puts down about 5%, not the whole 20%. The only reason you put down 20% really is to have even more skin in the game. That way you avoid what's known as PMI, private mortgage insurance. For FHA, you put down normally 3.5%. So using those figures is what I'm going to be basing it off of. I'm not going to be talking about taxes, insurance, any kind of, if you have an HOA or anything, or the amount that you're going to be paying for PMI. And I'm just going to see what we're talking about at that 6.25%. So if you look roughly those numbers, you're looking at about $23.39. Let's just call it $23.40. So $23.40 is going to be your payment, 5% down, 6.25% interest at about 30 years. So, okay. Now let's see if you're going to be doing this on a 50-year loan. Let's see what you're going to be paying. So now you're looking at a payment of about $2,070. So, if you're looking at the math, you're saving about $270 a month. But see, here's where it gets really insidious. Over that 50 years, you know how much you're paying? $1.2 million in total. Whereas over that 30 years, you're only paying a little over $800,000. So basically, you're giving somebody over $400,000 of your money. That's another house. That's the house itself. But this is where it gets really bad. You ready for this? You're not going to pay 6.25%. You ever looked at some of those interest rates? Like when you pay 15 years as opposed to 30? you notice that they're lower for 15 years. Guess what? You really think the lender is going to give you the same 6.25%? Nah, it's going to be higher. So I'm going to guess right now it's going to be probably about 6.5%. So let's see what it really is going to save you. Now, find the one that is 50 years and 6.5%. So in reality, a more realistic, and it could be higher, at 6.5%, your payment is going to be $21.42. Let's just call it $21.40. So you're actually going to save yourself a whole $200 a month. But this is where it gets even worse. You're going to pay 1.385, let's call it 1.4 million. So you're going to give almost $600,000, 1.5 times the price of that house up, so you can have a so-called lower payment. Really? Really? So that's what's being proposed. So I want you to keep all of this in mind when they're talking about these proposals. Now, what you should really be looking at, trying to save some money, is just getting a lower interest rate. Now, if you're just get a lower interest rate by 1%. Now, remember when we talked about, the 6.25, what if you got 5.25%? Do you realize that your payment would actually be lower than if you got 6.25% at 50 years? And then over that 30-year period, you would pay even less. Check this one out. Some of the new home builders now, and I really don't advocate for this right now. Some of these guys are having programs out there where they're doing 7.5s and stuff, where it's like 3.5% interest, 3.5% interest on 7.5s. So it's not fixed, but variable interest rate, first 7 years, 3.5%. Now, I'd rather somebody get into a fixed interest rate, but your payments would only be like $1,700 a month for 5 years. Now, I know this industry, including the mortgage industry, had this whole, date the rate, marry the house, but the rates didn't come down that much. They have come down, especially when they were like 8%. You really think they're going to be that high for that long? And some stuff I saw yesterday, I was at Builder. You're going to see the video come out. It may come out after this. I'm not sure which direction it's going to come out in. I was over there and, it's a dual community. I mean, it's got two different builders in the same community. One builder is building single-story homes and the other community is building two-story homes. So I go to the one community. They actually invite me out to do some filming and everything. And their incentives were are decent. Okay, the incentives are like 4.99 VA and FHA, and they were 5.25. That's where I got that number from for conventional. Okay, that was it. No helping with your down payment or anything. That was single story. But then I go over to the two-story homes. They were having an event too, but there was nobody there. Anyway, we're talking to them. Well, they had the same interest rates, but they had, get this, $30,000 in flex cash. That's money you can use for anything, including your paying all of your closing costs, maybe helping with some down payment, any of that stuff. Plus, remember, they already got the low interest rates. That's going to help you with your payment. So again, I'm advocating for all this new stuff. You don't have to worry about, rats in the walls and all that crazy crap. And I got one builder that I was looking at. They got this new down payment assistance program for FHA. Check out what the down payment assistance program is. It's 3.5% forgivable loan. I believe it's, what did they tell me the other day? It's like 3 years. It's either 3 or 5 years. I think they said 3 years forgivable, which means all you got to do is live that for 3 years and they pay your down payment, and they got low interest rates. So yeah, you got to pay your closing costs, but you don't have your down payment. And guess what? Down payment is a heck of a lot more than closing costs. So I'm telling you, this 50-year thing, I don't know if it's going to really work for too many people. I'm just going to leave it at that. You do the math for yourself. Talk to your lenders, talk to your real estate agent, see if it actually works for you. But I can just say this much. When you just start running the math wasn't mathing for me when I just ran it. Because if you look, saving a couple of $100, but if you got to do a 50-year mortgage, save a couple of $100 to get into a house, it may not be that time for you. Anyway, I'm getting to the end, about to pull up, and then we'll go grab me some gas from Sam's Club. Haven't tried this new Costco yet. Probably need to. My military brothers and sisters, you know the drill. I'm about to say Alpha Mike Foxtrot. All my information is in the pinned comment down below. Call, text, email, better yet, get on my calendar. Hopefully I should have popped up a little, for the guys who don't watch TV, I know a lot of you watch me on TV, a little QR code so you can just go click it with your phone or something, because I know it's like a little bit harder to go down below and click on stuff. And for the 80% of you who are watching me who are not in the military, you know I still love you, and I'm going to keep them lights on for you. Right now, YouTube is popping up a video they say you're going to love, and I hope you do, and I want to meet you over there. Please click that video. I'm going to meet you over there, and we're going to have some more discussions, okay? See you there.